Hello, this is the February 2015 video edition of the Iowa General Fund Monthly Revenue Memo. My name is Jeff Robinson, Senior Fiscal Analyst for the Iowa Legislative Services Agency, the nonpartisan support agency of the Iowa Legislature. Net General Fund revenue increased 12.9% in February when compared to February 2014. Net revenue increased $62 million for the month. Individual income tax increased $40 million, while sales and use tax increased $32 million. Both of these items were positively impacted by February calendar and document processing issues. Adjusting for the issues, net revenue growth for the month was not 12.9%, but more like 3.5%. Turning to the fiscal year to date, net revenue for the year has increased $215 million, which equates to 5.1%. Year-to-date adjustments are minimal. This chart provides general fund growth on a cash year basis by major net revenue category. The time frame for the chart is July 1 through February 28th. On the right side, you will see the overall net growth is $215 million. Income tax withholding contributed $126 million to revenue growth, and sales and use tax accounts for $98 million. The only category providing a noticeable drag on fiscal year 2015 revenue is the deposit of corporate income tax receipts, down $18 million for the cash fiscal year. The remaining categories combine for a positive $9 million revenue growth impact. During the month of February, the General Assembly passed and the Governor signed Senate File 126, the Internal Revenue Code Update Act. The act couples Iowa tax laws with most federal tax changes enacted by Congress during calendar year 2014. The major Iowa revenue impact of Senate File 126 is the allowance for Iowa income tax purposes of a net business income adjustment referred to as Section 179 expensing. Section 179 allows business owners to expense the full cost of certain depreciable assets in the first year the asset is put into service, instead of depreciating the asset over a number of years. The impact for those utilizing Section 179 expensing is a reduction in tax year 2014 business income for tax purposes, and therefore a reduction in 2014 income taxes owed. Congressional action during 2014 extended the availability of 179 expensing for tax year 2014 tax returns only, and the Iowa action does the same thing. To extend the provisions to future tax years, additional state and federal action will be necessary. The Iowa Department of Revenue estimates that the changes encompassed in Senate File 126 will reduce the net general fund revenue $99 million in the current fiscal year. The December Revenue Estimating Conference General Fund Revenue Estimate for the fiscal year 2015 calls for an increased revenue, excluding transfer revenue, of $430 million, or 6.8%. Passage of Senate File 126 reduces the expected revenue growth to $331 million, or 5.3%. With net general fund revenue increasing 5.1% through February, and with the Adjusted Revenue Estimating Conference projection of 5.3% for the entire fiscal year, actual revenue and projected revenue are currently quite similar. In summary, net revenue growth in February was a strong 12.9%, but after proper adjustment, growth was a more modest 3.5%. At 5.1%, year-to-date revenue growth is very much in line with the current projection for fiscal year 2015, once the projection is adjusted for a law change enacted since the projection was made in December. Goodbye, thank you, and please check out the next monthly video memo in early April.